What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down what Jerome Powell said that's very important, causing some volatility for the markets, and why his speech may have a lingering effect for the way the market moves for tomorrow. I'm also going to break down what's happening with President Trump as he's about to meet up with Xi Jinping in many hours from now, which could cause some high volatility for tomorrow, and also what's going on with the big tech earnings causing some more volatility. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. So tomorrow is going to likely be another crazy day for the markets. I do expect a lot of volatility with everything that's going on. So far, SPY and the QQQ do look a little bit dippy right here, and we're approaching our 20 EMA. We came very close to it. So as we dip a little bit more, we're going to see if this leads to a big dump, and if we're about to fill this gap down here on SPY, or if this is going to be a trap, because there were times when SPY started to dip only to get completely bought back up off our golden pockets. And in this case, we came very close to our 0.382 fib level before we start to see a bounce again. So the question is, are we about to see a big dump, or is the market about to see a big bounce? Honestly, guys, it depends on many different catalysts that are coming out between now and the next market open. So let's talk about what Jerome Powell just said, why Jerome Powell said some things that caused the market to dip and other things may actually help the market bounce. And then I'll break down exactly what's going to happen to the charts in my personal opinion. The first thing worth mentioning is that Jerome Powell came up there and he announced that the Fed have cut interest rates by another 25 basis points. This is a big development, and this is exactly what the market had predicted. The market already priced that in, so as soon as the news came out, the market started to consolidate. And then as Jerome Powell was giving his speech, the market basically was consolidating, and then he said something that caused the market to dip. Jerome Powell has been talking about how the Fed has a very important dual mandate to manage inflation and the overall jobs numbers. Now, he described the jobs numbers as quite stable to the point where we're not necessarily in a panic frenzy, and he made that very clear. But simultaneously, there were some upside risks to inflation, at least for the shorter term. Now, despite that, everything is still under control because this is exactly what the Fed was anticipating. And the numbers are not too bad because the longer term projections are still aligned with their 2% goal. So overall, things are still looking fine, at least for the Fed. However, despite that, it's also very important to remember that the Fed has to look at the data in a very unbiased way and wait and see what happens with the labor market. They're going to be very careful about that, and they can't necessarily promise or give us high confidence in a cut for December. And that's a big shift for the market because before there was a 90+% chance we were going to get a cut in December, the market was pricing that in. Jerome Powell gave us a reality check that look, there's no guarantees we're going to get a cut in December. They have to look at the data, they have to wait and see how things are going to go. And then that caused this to dump quite a bit. Now there's only a 67% chance we get a cut in December. And that in turn is what caused the market to dump during his speech. But then we started to bounce because Jerome Powell is also implying that the Fed is going to ease up on policy. And why is that? Well, because of the fact that the labor market has risks of going up when you look at like the new pieces of news in the private sector of more layoffs, the Fed has to be very careful, and they are in the transition where they're not going to be as tight on policy because, as many different economists are saying, we're nearing the end for quantitative tightening, right? The short term debt markets are looking for a big shift. And there was a lot of stress on them with all these tightening measures. The Fed was raising interest rates for quite a while, and they kind of like stopped on that. And now they are essentially beginning to cut. But it's not just that. The Fed is now kind of like shifting what they're doing with their capabilities. So, for example, the Fed are going to be buying up more of the treasury bonds, which in turn is going to stimulate the economy. This is not necessarily as potent as printing money, but it is to some extent another way to stimulate things, meaning that the Fed is wary of the possibility of pain to come, and they're already starting to take measures to stimulate things. By buying up some treasury bonds, that is once again going to be another form of quantitative easing. Although it's indirectly easing up on policy, it is still the first sign that we are now transitioning away from quantitative tightening and now we're easing up. And with that happening, that is actually more bullish for the markets because this is, in a way, going to be like a stimulus that's coming. And this is also the Fed's way of kind of like preparing for, the more hard landing that could be coming, right? Simultaneously, because of what we've been seeing, at least for the labor market. Now, as of right now, Jerome Powell made it very clear that the labor market is more like stable. It's not doing too poorly. but the Fed has to be very careful because it's very risky, especially because things could change very, very quickly, right? And what typically happens historically is that we start to see the economy tanking, and that's when the Fed starts to kind of like scramble to start cutting to catch up to the curve. And that's why, the Fed are being very careful right now. So, what does this mean? The market dipped when the Fed told us that there's a less likely probability of us getting a cut because they're uncertain. But of course, things could change as the weeks progress. We're also waiting for the government shutdown to end once the government gets funded again, and then we're going to see more data. The Fed's going to be waiting for that. That's part of why we dipped. But the good news, and part of the reason why the market bounced, is because Jerome Powell remained very stern, and he made it very clear that once again we're doing well, inflation's not doing too poorly, and the Fed is once again going to be easing up, at least to some extent. And he answered a lot of questions involving AI, the labor market, and such, but a lot of the things were just very redundant. So overall, the market kind of dipped and then bounced with Jerome Powell's speech, and we were holding up quite nicely in the beginning. However, the second thing came out, and that caused the market to dip. So the reason why tomorrow is going to be big is because we do have one catalyst that's not as bullish. That is the big tech earnings. So right now, we just got Meta, Microsoft, and Alphabet announcing their earnings. Also for tomorrow, it's going to be a big day again since we have more big tech earnings with Amazon, Apple, and Coinbase. But what happened with these three that just came out? So unfortunately, Meta stock is dumping because they missed on their EPS. And also because of other factors, we're seeing the share price down a little bit. Revenue is at about 51.24 billion, beating the expectations of about 49.5 billion, and their EPS was only at $6.03. Unfortunately, that is short of the $6.72 that investors wanted. So despite the overall earnings call going on, the share price has been dumping. I also think that the $15.9 billion tax charge also dragged down their earnings. They did talk about that. So the share price is once again not doing too well for Meta. Microsoft is kind of flat right now. They had decent earnings overall. They did actually exceed a lot of expectations with revenue at 77.7 billion. And then their EPS was not too bad. Their overall cloud revenue is up 40%. And for the fiscal year, they are expecting decent operating income and good growth. So decent guidance, good earnings overall. It wasn't really enough to help the share price pump because I think a lot of this was priced in. So the share price was down 3%. Now it's down like 1 point something percent. So it's just down a little bit. So overall, right, we have one big tech company in the red big time. The second big tech company is flat, a little bit in the red, and the third one is in the green, right? That's Alphabet. It's up 6% right now because they had good beats on EPS and revenues, and also they beat expectations with double-digit percentage growth. Overall, good job with net income jumping. Then we also saw their full stack approach on AI developing strong momentum, and we're looking at good guidance overall from Google. So one of the companies is green, the other one's red, the other one's like flat or a little bit in the red. That means there's two of them that are kind of like red and one of them is like green. That's why the market's kind of like down in the after hours. So for now, the market is dipping just a little bit because of everything that's been coming out. But it's not that bad. SPY is only down 0.2%. The QQQ is only down about 0.23%, not too bad. Now, all of this is just the two factors affecting us, but there's going to be one more major factor affecting us, and that's going to involve President Trump. We're going to either see the market continue to fall, to come down to fill this gap, or this downside move we're seeing is a trap for the bears, and we're about to see a big slingshot right back up to new all-time highs if we get a big bounce with President Trump. Why is that? First and foremost, President Trump said that we have pretty much reached a trade deal with South Korea. His quote was that we reached a deal. We did a lot of different things, a great session. That's what President Trump told reporters. And then he also said that we came to a conclusion on a lot of very different items. So President Trump has been going to these different countries in Asia, meeting up with leaders and negotiating deals. That is some big news that's been coming out. And now it's very important that he is meeting up with Xi Jinping, the president of China. So when is he meeting up with him? So President Trump will be meeting up with the president of China at 11 o'clock a.m. in South Korea, which is going to be around 10 o'clock p.m. Eastern Standard Time. At the time I'm recording this, that's about like 4 or 5 hours from now. So in not too long, he's going to meet up with Xi Jinping, and this is going to be massive, okay? Because First off, President Trump said that the meeting is going to last 3 to 4 hours. And then last week he said there's going to be a great deal for both sides. They have a fantastic relationship and the deal is going to be fantastic. He was very confident in a trade deal coming. That's what President Trump said. What will the trade deal include? Well, remember, this whole fiasco started off with the rare earth export controls that China had imposed, followed by President Trump's very high tariff threats on China in response to that. So we're going to see what happens as time goes on with all of this that's going on. But they're going to be once again negotiating about these minerals that are very, very crucial for our semiconductors and products. And this could be very, very big. So far, our trade representative has mentioned that the export controls could be delayed by 1 year if this goes correctly. That's the first thing to remember. Secondly, soybean sales, we're going to be looking into that. There's going to be other things, pressure on Russia, President Trump's tariffs. Massive, massive things are about to be discussed by these two leaders. President Trump and President Xi Jinping are the two most powerful men in the world, arguably, and simultaneously, they are constituents of the two largest economies on the planet. This trade deal is so huge, it's going to be affecting hundreds of billions, if not trillions of dollars worth of goods that are involved directly and indirectly from our trade. It's going to be huge, guys. So this is massive. Hundreds of billions of dollars worth of goods that are directly traded between the US and China are going to be affected, and it's going to be massive. So this is going to be causing a lot of volatility. On top of this, President Trump also said that he's going to be discussing Nvidia's AI Blackwell chip with President Xi Jinping. They're going to be talking about the ban on importing Nvidia chips. If that could get lifted or if something could change, that's going to be very big for semiconductors. So this is going to be massive for semiconductors. The tariffs alone, the export controls on minerals, and then a literal discussion involving the Blackwell chip for Nvidia is going to be huge. So all of this stuff is going to cause a lot of volatility for semiconductors and the overall market. So keep that in mind. So what's going to happen tomorrow? Honestly, guys, I can't make promises, but I do want to be very honest. If President Trump is correct, he's been saying that there's been a lot of positive momentum with this. He said they've had very productive meetings, and he's been saying for the last few weeks that the US is going to have a great fair trade deal with China. It's going very, very well. He said that he has a great relationship with Xi Jinping. If all of that is true and we truly get a really good trade deal, and if the market likes it, those are some factors, some of the things you have to remember. If we truly get all those things, then it's going to be bullish. It could help the market bounce. If not, if it's not really enough to get the market to bounce, we could be looking for the rug pull. So if if President Trump announces the trade deal, if it's not really enough, or if there's no trade deal, I would not rule out the possibility of us losing 682 to start dumping to fill this gap towards 677 if things don't go well, or if it's not really enough to get us to bounce, or if this is all like priced in. But if the market gets a wow factor, President Trump excites the markets and he announces a very big trade deal that is very positive for Nvidia, for the export controls. If he delays his tariffs and if he causes a big explosion in the markets, we could just gap up and continue to run back up to new all-time highs like this, just like how we did it right here. There were times when SPY was starting to dip, then we just got completely bought back up. We started to dip last Friday, then we just got completely bought back up. We started to dip again after FOMC, and are we about to just get completely bought back up tomorrow morning? We'll have to see about that. It depends on the trade deal and such. So I don't know for sure, but I do want to say the chart is still bullish. Whether we, come down to, touch the 20 EMA and then bounce, or if we come down to fill this gap and bounce, either way, we're still looking bullish, whether we bounce from here or if we bounce from just right here. So the chart's still bullish, whether we get a small dip or a big dip, or if we're just done dipping. That's my overall consensus. And honestly, guys, I have a good feeling about what's about to come. And I think that's, my bias would be more bullish, that we might actually just bounce from here, but we'll see just to be safe. You always want to be very unbiased. You never know what's going to happen. So we'll see how it goes. But overall, the charts still remain more bullish. On the triple Q, the same thing is going on. So if you want to be bearish on the QQQ, you want to see us lose 629 if that fails us. We're looking for 625. If that breaks, then there's this gap to fill back down to 617. If we don't really get much of a bounce, that could be the more bearish case. Even with some big tech stocks dumping, the QQQ is only down 0.28%, which is not really much, which shows the market is still very resilient. But just in case we're bearish, you want to see if 625 breaks or not. If we're bullish and we hold above 635, we're looking for new highs. It depends on what happens with President Trump's trade deal with China. I think that's one of the biggest factors. If it goes well, if he announces a very, very big deal, and if something good comes out for the semiconductors and they end up exploding, we could gap up and go from here. We could just continue to run. That's always a possibility. You want to be open minded, guys. So we'll have to wait and see how it goes. I'm saying this because President Trump has been very optimistic the last 2 weeks. He was saying there will be a deal. It's going to be fantastic, and both sides are going to win. He said that many, many times. If he is correct, and if the market likes it, we could bounce. If not, we're looking for this gap fill down here. Let's see how it goes. We might get a big bounce. Now, the Russell is not looking that great. We need to get back above 248 to bounce higher. If not, we're looking for a dip to 245 again. Let's see if we hold support here and try to rebound. It could go either way. Hopefully, we try to bounce back above 248 to see some buyers. ES is barely at 6,900. We're at the make or break level. If 6,900 breaks on ES, we could be dipping to fill this gap at 68.34. If we don't end up dumping like that, if we hold our 20 EMA and we start bouncing, we could continue to rally right back up. If we get a good deal from President Trump, we'll see how it goes. On NQ, we have support at 26,000. If we lose 26,000 to 20 EMA, this could be dumping back down. But if we hold 26,000, there could be a monstrous bounce coming, and we could continue to rally to new all-time highs if President Trump gives us the big deal. So I don't know what's going to happen. I want to be very unbiased about this, but President Trump has claimed that it's going to be a very, very big deal. It's going to be fantastic. Those were his words. If he's right, we could just, bounce. We'll have to see about that. And looking at Bitcoin is trying to balance here. It's favoring a push for 112,000, at least technically speaking. We'll see how it goes. Tesla held up very nicely. It did not bounce, or it did not really drop that much, excuse me. If we hold above 460 tomorrow, we could be looking for a attempt for 465. But if we lose 452, we're looking for a dump back down to like 444. Hopefully, we could hold above 460 and bounce back up for like 465. So we'll see what happens. Nvda, we have support down here at 205. If that fails us, we could be dumping to the low 200s. But if we break past 208, we're looking for a big bounce. It depends. President Trump said, like I said before, he may be discussing NVIDIA's Blackwell AI chips with President Xi Jinping. If they lift some of the overall restrictions, if they lift the restrictions, this could be really bullish for NVIDIA. NVIDIA might take off tomorrow. We'll see, though. We'll see just to be safe. If NVIDIA is not mentioned, it could still dip. I'm honestly in the middle, but I would not rule out the possibility of a big bounce. Apple will also be affected by this. Apple's actually pushing right now in the after hours. We need to lose 266 near the 20 EMA to be more bearish to fill the gap back down to 262. As long as we're above that, we're going to be favoring 272.5 and 275 as our targets. It looks bullish. We're favoring a big break in Apple. We'll see just to be safe. Netflix, I like the fact that it's trying to base, and I did talk about this for the last couple of days. It's trying to form a base around 1,080. I want to see that hold. If it holds, we're looking for 1111 all over again. If not, we could be dumping, so hopefully we get a nice bounce. MSTR is on a bit of a downtrend. We're going to see if we bounce off a bullish divergence or not. We're at support near this 274 area. If we bounce here, we're looking for 283. For Celsius, we're looking kind of weak here. We need to reclaim 62.2 to bounce. If not, we could be dipping a little bit more. It depends. It's very indecisive. It does favor a retest of like 61 flat before it tries to bounce. Supermicro got another rejection. As you can tell, we're just making lower highs. Unless we get back above 52.23, we could be dipping back down towards the lower 51s. This does favor downside a bit more unless we get a big ship deal involving President Trump. This could also resemble an inverse head and shoulders. It looks a little bearish, technically speaking, and it looks like it might be dipping to the lower 50s, so we'll see if that happens or not. Palantir, however, looks more bullish. Nice breakout favoring 200. Rivian might be retesting 13.5 then 13.39. We'll see if it bounces off those levels. This might see some downside. For other tickers, we also happen to have SoFi, which is going to likely retest 30 flat. It needs to bounce off this to continue to be bullish. If not, 28 is coming. AMD is more bullish. As long as we don't lose 253, we're going to favor consolidation than an attempt for 266. ARM has support right here around 169. If that fails us, we could be tipping back down towards that 166 area if 169 breaks, but we need to get back above 172 to bounce. This resembles a head and shoulders, so it does look a little bit weaker. But we're going to see, just to be safe, depending on the news. That's another factor. Palantir, not Palantir, PayPal is kind of weak right now. We got a big dump. Could be dipping back down to 68 or below unless we try to bounce here. Coinbase needs to hold 346. We're at support barely. If we don't hold that, we dump back down to 338. If we do hold this, we're looking for a bounce. Amazon has support down here at 226.32. We need to hold this or else we dip more. We do have earnings tomorrow, so I'm honestly in the middle with Amazon. It could go either way until we see what happens with earnings. Meta dumped quite a bit, but hopefully it tries to form a base right here around this 690 area. I hope we can try to hold this. It's still kind of weak right now, so be careful. Google, however, is more bullish. It's up 6.33%, excuse me. Looking for 295 as our target. It does look a bit more bullish. Microsoft is down almost 3%. Hopefully it tries to bounce and gets back above 525. This is part of why I think the market dipped a little bit, because we have two big tech stocks out of three in the red and only one out of three is in the green. Oracle is down a bit because of what we saw with big tech. It's following the trend, but it does love to bounce near 270, so hopefully it tries to bounce near here. We'll see, though. It's kind of weak and might retest that low. The VIX needs to break 17.73 to be more bullish. If not, it could reject. It's in the middle. The 10 years in the middle. The 10 year actually came up a little bit. It kind of like dipped and started to bounce after Jerome Powell's speech. It's bouncing because he said that there's no guarantees of a cut in December. That's why the 10 year is bouncing alongside the dollar. And we're waiting for crude. So from a technical standpoint, okay, it does look like the market might dip just a little bit, but then we could bounce near our 20 EMA. We have not lost any structure. If we lose structure, this support right here, there is a gap to fill on SPY and the QQQ, right? There are gaps to fill if we start breaking structure, right? But as of right now, there's no sign of that. We're still holding up despite the fact that the tech stocks are down. We're still holding up nicely. And I think the next big factor that's going to really affect our momentum is how this meeting with President Trump and Xi Jinping goes. If we get a big deal, and if Nvidia is involved in the deal, if President Trump negotiates something really good for Nvidia, if it happens, right, this could help the overall market bounce alongside tech. We'll see if it happens or not. So let's be very patient. I do have a more optimistic view because, once again, the market's at support, and simultaneously there's been like weeks of good news coming out about how the U.S. is making progress with negotiations on China. And then President Trump also said there's going to be a deal coming. He's very confident about it, and he said it's going to be fantastic. So it gives me hope that maybe we could get a good deal by tomorrow, but we'll see just to be sure. And then the specific details about the deal will have a big effect on the markets. If the market likes it, expect a big bounce. If the market doesn't like it, there's a gap to fill below. As of right now, it's more likely the market likes the deal and we try to bounce, but we'll see just to be safe, guys. I like to be very unbiased. So be patient. Let's see what happens with tomorrow. It's going to be a wild day, and we're going to be very, very mindful of what's about to come. Thank you all so much for listening. Get ready for tomorrow. It's going to be a big day as we have huge news coming out, and we'll be very patient and ready for tomorrow morning. Thank you for listening. Have a good rest of your guys' days, and I'll be back very soon tomorrow to give you guys an update on what's happening with President Trump and Xi Jinping. Have a good one, and peace out.